Hey guys, it's Jenny Silver, and today I want to talk to those of you who are looking to start a small business, but you are not sure if a sole proprietor or an LLC is right for you. I want to talk about some of the differences between sole proprietors and LLCs to help you make the best decision. Please keep in mind that while I do provide business coaching to my clients, I am not your contracted business coach, and I do recommend that you seek professional help from an attorney or a CPA on all business-related decisions. One of the very first steps that you're going to have to undergo when you start your own business is to determine what type of business entity you will have. If you start to collect payments from customers or clients and you have taken no legal action, you have not registered any paperwork with the state, you automatically default to what is called a sole proprietor. A sole proprietor means that you and your business are one and the same. There is no legal separation and there is no taxation separation between yourself and the business. You are automatically defaulted to a sole proprietor if you don't file any additional paperwork. That does not mean that your steps of action are complete. As a sole proprietor, you're still required to look up what permits, licenses, and fees are required within your city, state, and county in order to legally conduct business. The best place to look this up for the state of California is Cal Gold. I'm going to link that website in the video description down below. Now, if a sole proprietor wants to keep things simple, they can operate under their first and last legal name. This will mean that they do not have to file any additional paperwork to register a business name with the state of California. So what if you want a separate business name? Can you do that as a sole proprietor? The answer is yes. If you're a sole proprietor and you want to operate under anything that is not that first and last legal name, then you will need to register a doing business as name, which is also known as a fictitious business statement. As a sole proprietor, you and your business are one and the same. This means that any lawsuits, any debt, either on your end or on the business's end, transfers over to each side. If your business is sued, then you are personally sued and you are liable to those damages. Likewise, if you carry something such as credit card debt and you are trying to apply for business financing or business credit cards, then that debt also passes through as well. This is one of the major reasons why individuals may want to migrate over from a sole proprietorship to an LLC. LLCs separate the business entity and the personal entity. That means that your business assets, liabilities, etc., your personal assets and liabilities are separated. If you're someone that is in a high-risk field where people have potential to file lawsuits frequently against you, then you will want to make sure that you are separated from your business and form an LLC. If you choose to separate and form an LLC, that means that any lawsuits that are filed against your LLC will not enter in and go against your personal assets. Now, in terms of taxation, an LLC is automatically a pass-through entity when it comes to taxes. So all of the business taxes pass through onto your personal tax return. But LLCs do have an option here to elect S Corp status in terms of taxation. Many are confused when they start hearing the term S Corp. An LLC is a type of business entity, just as a sole proprietor is a type of business entity. An S Corp is not a type of business entity, but rather a taxation status. It's important to understand what an S Corp is when you weigh the benefits of being a sole proprietor or an LLC, because electing that S Corp tax classification is a big benefit to many types of business owners. Now, electing yourself as an S Corp does have a lot of additional information that you will need to consider if you are looking into that for your business, but that will require a separate video. And I do recommend talking to a CPA. Taxation part of deciding what entity type is where it gets complicated. If you are a business with a larger income, you are more well established, you may want to switch to an LLC and elect S Corp status. Why? Because S Corp status allows you to take your business net income and pay yourself a reasonable salary. You then are able to take the remaining profits from the business and pay it out to yourself in the form of a shareholder's distribution. What is the benefit of that? Well, if you are earning the same amount as a sole proprietor or as an LLC taxed as a pass-through entity, meaning you didn't elect S Corp tax status, then all of your business's net income is your income and it's the business's because you're a pass-through entity. Therefore, all of that net income is going to be subject to self-employment tax, federal income tax, as well as state tax. Now, self-employment tax is in the amount of 15.3% and includes Medicare and Social Security taxes. If you are elected an S Corp status, you pay yourself out a reasonable salary. That salary is going to be subject to payroll taxes. Now, because you are an employee of your company, you are not self-employed, that owner's distribution is not subject to self-employment taxes. This means that 15.3% on that remaining amount that wasn't paid out to you as a regular salary does not undergo that 15.3% in taxes. For those individuals that are able to cover the cost of payroll, that are able to set up a payroll system, pay themselves out as an employee, and they have a regular, steady amount of income in their business where electing S Corp status makes sense, this can save them thousands of dollars per year. Now, the last thing to consider are fees. Setting up a sole proprietorship is relatively quick and inexpensive. You're going to be subject to paying fees to obtain a business license, register a fictitious business name, as well as other permits and fees required by your city, state, and county. Now, with an LLC in the state of California, you're going to be required to pay an $800 annual LLC tax. Additionally, there are going to be setup costs involved for registering and setting up your LLC. Now, aside from the $800 annual LLC tax, the costs of actually setting up your LLC have a wide variety. If you're utilizing a service such as LegalZoom or InkFile, then the cost can be several $100s. And if you're utilizing the services of an attorney, then the cost can be much greater, but they can also help to guide you, issue you regular reminders, etc. So to quickly recap, what are the benefits of being a sole proprietor versus being an LLC? Proprietors are relatively fast, easy, and cost efficient to set up. You are automatically defaulted to a sole proprietor, and the fees involved in setting up your business are going to be minimal. You and your business are one and the same in terms of taxation, debts, and liability. As an LLC, you and your business are two separate entities. All of your finances must be completely separate. Your personal assets are protected from any lawsuits that may fall into your business's hands, and you have the option as either defaulting to a pass-through tax entity or electing S Corp status for taxation, which means that you will be required to pay yourself a salary, treat yourself as an employee, but may be able to save some additional money on taxes if your business earns enough income in order for that status to make sense. Lastly, the LLC has additional fees that you're going to be required to pay annually. Okay, you guys, I hope that was helpful. Please click like, subscribe, and leave me a comment down below.